Hello everyone, thank you very much for joining me for today's snapshot. Today we're going to be talking about the reflation expectation paradigm shifting as reflected in the euro US dollar. But before we do that, please note that CFDs are high risk products and that you should be completely aware of the risks that they pose. Also note that this is a general market commentary only and does not constitute investment advice. And finally, these are our sources of information. Okay, thank you very much for that. Now, the German yield curve relative to the US yield curve is actually quite surprising. Since January, the ratio is reflecting stronger reflation expectations in Europe relative to the US, and the euro US dollar may have changed trajectory as a result. Just bringing up the charts here. The top chart over here shows the German yield curve as a proxy for Europe, divided by the US yield curve, and you can see that during 2020 the relative nature was declining, and as a result we see that the euro US dollar appreciated relative to the greenback. Now, since January, something quite remarkable has taken place. We can see that the German yield curve, again as a proxy for Europe, is now starting to outperform the US yield curve. And at the same time, we can see that the euro is depreciating against the US dollar. Now, let's just end off with some key takeaways. Since January, the German yield curve shows that market expectations are positive for euro reflation on a relative basis to the US. Now, this can have broad-based ramifications if the greenback starts to discount the scenario. So we need to be watching this very carefully indeed. I hope you found the snapshot useful. If you did, please click on that subscribe button. Thank you very much for joining me, and I look forward to speaking with you again in the near future.